Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 21st, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. This week was lots of fireworks in the stock market. S&P moved sharply lower. Small caps are in a bear market outright. I think NASDAQ is oversold, so we'll potentially see a bounce. However, it's very interesting to see that Biotech actually collapsed and given back the entire post-pandemic rally. So we'll look at that as well. Retail ETF, XRT, and the stock of Amazon are in bear market. We'll look at the bearish market breadth divergence, which did resolve to the downside, and potentially there may be more, but I think once again it's oversold currently. We'll look at high yield junk debt, which I think is leading the stocks down. Let's see if it continues to do so. Gold is reaffirming its bull market, and Bitcoin, I don't know, it could just completely disappear. It's also a possibility, but it is collapsing. If you're a subscriber, then watch out for these stocks. We're gonna cover them in the videos separately. If you're not a subscriber, consider signing up by clicking the description of the video. Looking at this chart, you can see there are 4 lines in this chart: green, blue, red, and yellow line. So you can consider them to be support and resistance lines. These are my proprietary indicators. You can find out more information about them as well. So looking at this chart, you can see we actually finally have landed on this blue line literally today. So looking back to the entire post-pandemic rally, and there's the pandemic rally, April, May of 2020. This is the beginning of an uptrend. You can see that we haven't touched it. We've been always above this green support resistance line, and finally, this is a big occasion. We're finally there. So to me, this is definitely oversold and still within a bigger uptrend. So I would be considering buying here pretty soon. We just need to see a sort of a bottoming pattern. Now, the million-dollar question, of course, is if we buy here, what if it continues lower, right? So we need to see evidence of a bottoming pattern, and even then it's no guarantee that we will hold here, but this is indeed at least a good place to be considering even buying. Same goes for Dow Jones. Dow Jones Industrial Average, we have landed now on a blue line, which is oversold within a bigger uptrend, and let's just see if we're going to get a bottoming pattern here. NASDAQ actually blew right through this blue support resistance line. You can see we tried to bottom here on the 19th, but blew right through it. I think we're oversold. So there is a, I don't know, belief, I guess, that volume sometimes indicates bottom of for NASDAQ. So definitely huge volume today, you can see right there. I'm not a big fan of volume analysis, but you know, it's definitely pretty large. Let me see, I'm gonna zoom out a little bit. So the last time we had similar volume was right there in March, but then again we were way above here. We were at the green support resistance line, and yes, indeed it was a bottom, but will this be the bottom? Yes, it's possible. You know, it's really possible. I'm not a big fan of volume analysis, so I wouldn't really worry about it. But oversold for sure. Let's see, we're gonna bottom here and then rally. If we close above the blue support resistance line, we can easily make a new record. Small caps, on the other hand, so these guys actually broke down completely, and you can see right there on the 18th of January, this is a avoid signal. So avoid in my book means we're in a bear market. And look how quickly this happened. We were at all-time highs, no problems, and now we are closing below this yellow support resistance line. So again, this means bear market. And also notice how the lines got closer together. So once again, I kept pointing this out that when the lines get so close together versus see how wide apart they were, it makes it easier for the trend to change. And indeed, this is what happened. Looks like right now we have a trend change to down. So the million-dollar question again is this going to drag on the large caps? Nobody really knows that. It's reasonable to expect a bounce for the entire market. Will this bounce carry this ETF higher? Because we need to go pretty high now. We need to get, see, to the blue line. That's 14% away. And then I will say, okay, we're back in the bull market. And here's a very interesting one, Biotech XBI. Notice how this is the beginning of a bear market for me right there, 10th of November. So that's, for stocks, I give a benefit of the doubt to bulls, so we use a yellow line. And notice that, if we, let's say we bought sometime, I don't know, here, back in March of 2021, and then we held on to it, then we would have been out here because this is our stop. So it would, you can see how pretty far, how long it took, and then it collapsed. So this is another reason why I use my system, is that it at least gets me out for sure. So notice how much more I would have lost if I didn't get out. I would have lost additionally 30%. You see, that's a huge loss. It went from 121 to 89. It might bounce, or it might not, or it might continue lower and then bounce somewhere from the lower levels, you see. So we do not know the future. That's why we need to act at the time of a signal, and the signal actually occurred here in November. So very interesting that Biotech was like a first signal something is not right. And here's another signal something is not right. XRT retail ETF, again, notice right there, the 20th of January, this is a void for us, for my system, and it came from high, from new records all the way to a void. So, it's not a major sector, it's an industry group. A sector would be like XLP or XLC or XLY. This is a retail, what do you call it, a industry group from the XLY, from the consumer discretionary. But it is indeed an important one. And of course, the biggest one here is Amazon, and we were trading it. And these previous alerts from November, they were successful because then you got your target. But then this latest alert right there from December 6th, that was a failure, and you can see a void, you see. So this is our system in action. We're getting out in time. You cannot have 100% success rate, and you will have some trades that will fail because there's just no way to predict which trades will be successful and which ones will fail. And some people will argue with me. Some people argue with me that they can get their success rates to like way above 90%. And I'd love to see it. It's not impossible, but it's quite difficult. My success rate somewhere in the 75% rate, and I'm pretty happy with it. So with this thing, Amazon, we're basically at a void, and this is a huge company. You see it, so it's a bellwether company for sure. This is an important happening. We need to pay attention to this. So we are indeed doing that. And here's what I wanted to point out. Here we have New York Stock Exchange composite advances minus decline volume. So if a stock goes up, we will assign its volume a positive number. If a stock goes down within the day, we will assign it a negative number. Then we will take the advancing volumes and subtract from it the declining volume, and we'll come up with a number. And then we'll take that number and add it to yesterday's number. That's why it's called cumulative. All right, you're with me so far? If you're not with me, you can actually look it up in chart school on StockCharts.com. You can look it up, advances less declines, okay? Advanced decline volume. So looking at this chart, the advances less decline volume, what I just described your process of, peaked right there in May of 2021, so close to, well, 9 months ago or so. And since then you can see it was decreasing, while the actual S&P 500 in the same time frame from May till December, basically it was increasing. Now finally we saw this divergence play out, and stocks significantly dropped finally. But additionally, you can see how much the volume dropped as well. So we're now, this volume reading is now back to November of 2020, you see. So it is not unreasonable to expect the stocks to continue lower. And this is, anybody's guess how low, but if we continue lower, I mean, it's possible we'll go to like 3,500. So we can look at 3,500 for S&P 500, which is going to be like disastrous, basically. 3,500 is like there. So it will be a bear market by then. All of this could just turn around and will continue higher. But it's something to keep as in the realm of possibility. Here what I wanted to show you, just very current. This is now, see, I undid it is no longer cumulative, it's just candlesticks. So I'm gonna look at it from about 2 years or whatever. Okay, so don't worry about the number on the bottom, but this is a weekly just raw reading, how much volume is negative, and you can see how negative it is. So it is definitely oversold. So it is reasonable to expect a bounce tomorrow, Monday, next week. So it is definitely reasonable. See how unbalanced this reading is. And we had this unbalanced reading here back in June of 2020, and then it dropped later on. So we're seeing very unbalanced reading. So we will need to, potentially there will be a bounce next week. It's very highly likely. All right, continue on, we're looking at junk debt right now, junk bonds. So junk bonds actually hit a new low, I believe. Let me see, low is 106.49. Here is 106.48, almost hit the new low. Basically we're retesting the lows from the November. It doesn't look good. It's very easy, it can drop. So we can duplicate this entire depth, it's about 2% to the downside. So easily junk debt can continue to like 104. Why do I care about junk debt? So let's look at it, longer term. So we're looking at junk debt right now on monthly time frame. Let me see, go weekly, maybe it's better. For some reason the correlation doesn't seem to work right now. Yeah, it's for some reason not working. But anyways, junk debt and stocks correlate highly to one another. So if junk debt continues lower, most likely stocks will do the same. So this is why I keep pointing out junk debt as a potential trouble ahead, and also warning that it was the first one, so to speak, to enter into a bear market. Finally, gold has reaffirmed its uptrend. So a new breakout, I believe, happened here in late December, 31st of December. This latest big stick here on 19th of January was very, obviously large and very bullish. So right now we're kind of trading around. We can go to 4-hour chart, and actually looking at 4-hour chart, it's very reasonable that we'll pull back towards around 1812. This blue support resistance line. It's quite often that it happens. So If we look at daily chart, 1812 would be like there. So it's not unreasonable for a pullback for gold, but I think it would be a buying opportunity at that time. So we're looking to buy various gold related as well, and we're looking at gold stocks. Here's gold stocks, gold miners ETF GDX. So still we're in the bear market. You can see a couple of bearish opportunities. Here's one in 22nd of November, another one in October. Actually, right this instant is a opportunity to sell it short, but I'm not sure I want to. I think if anything, maybe we'll see a bottoming pattern and potential. I mean, this is bottom picking as it gets. This is the bottom. So, you know, bottom is right there. Your risk is like ridiculous, very low. So if gold continues higher, then gold miners could skyrocket. Finally, Bitcoin. So we are playing Bitcoin. Latest opportunity was to the downside. In fact, that was the alert right there. January 5th, right there. Opportunity, and the alert was on 6th of January. Yes, you got more than your target, so it went from 43 to 35. Yeah, that's a nice move. That is a 17% move in your favor, and this is just a starting, I think. If we look on monthly chart of Bitcoin, I don't even know how to estimate downside, but or rather, let me rephrase it. I'm gonna estimate downside as depth of this pattern. So which pattern? This pattern from the height to the recent breakdown from this pattern. So that's a 41% move. Yeah, it could end up, let me pull it up. I mean, this move could continue to like 12,000, but actually it could continue lower. I mean, if there is no faith in Bitcoin. So we're looking at another, 50-60% down easily. So, all right, this is interesting news, interesting week, definitely lots of fireworks. Again, you can see I'm using pretty much exclusively my indicators. How to get them? Go to MasterChartsTrading.com, click on products, sign up one of the products. Got the indicators. I have the newsletters. So newsletters, you get my ideas about what I'm trading. So all of these stocks, for example, are going to be covered in the paid newsletter. And the ultimate bundle is basically both the indicators and the newsletters. So do sign up for that. All right, if you have any questions, let me know. Thanks for watching. Have another great trading week. Bye-bye.